This is now the fourth or fifth time that Bitcoin is having this just like rip roaring rally, and you just can't fucking write it off anymore. It survived low interest rates. It survived the period of apathy. It survived the SEC onslaught. It survived all of these things. Like it's becoming obvious to the world. Looking at these ETF flows, like how you're literally just hoping they stop in order to, if you want to buy a dip.
Okay, welcome back to the much delayed second episode of the year of 1000X.
I think it's the second episode. We were supposed to record an episode, but then instead we went out and got drunk.
We did do that. Which, by the way, that was a hell of a night.
It's awesome.
We just rocked back whiskeys at Chiltern.
Yeah.
For I don't know how long. We basically had I wish we could have recorded that podcast. I think you guys would have really appreciated it, but I don't think it would have gone past our censors, unfortunately. It was great. Yeah. Next time we're both in London, maybe we'll invite a few people out. You know, we'll post a picture if you can find us. You can come hang out with us.
We should start having like community 1000X get-togethers where we repeat our unwaveringly bullish thesis. Like you didn't miss much. The 1000X podcast that happened at the bar was basically us talking about how we were bullish, which we talk about on Twitter and every podcast.
Because the reality is, how could you not be bullish at this moment in time? It's just right. So let's go through what happened. So post approval of the ETF. This is something that we've been talking about for a long time. Is that GBTC held a ton of stale capital, and that there was very likely a lot of directional capital held within that product that was not able to exit for many years, right? Because you remember from the time, if I'm getting my dates right, February 2021, the discount on the product went negative. So a bunch of people just started buying it to replicate their Bitcoin exposure. And so at some point, a bunch of people just end up directionally long this thing. And so they're going to start redeeming, because one of the biggest reasons that they were directionally long is, well, there was a massive discount, right? At a 50% discount, you're making 100% return once that discount goes back to flat. Everybody knows the story. I don't need to rehash it. But there were going to be outflows. People saw the outflows and took that to mean that there would not be any inflows, which is the opposite. We are currently experiencing some pretty insane inflows. I mean, this ETF is breaking a lot of records right now. And we knew it would, because you have people like Larry Fink getting on TV telling everybody that it's time to actually make room for digital assets in your portfolio.
I was blown away by the FUD when the ETFs first launched. I mean, GBTC is not a hard product to understand. It's before it became an ETF, it was a trust that held Bitcoin, and you couldn't redeem the trust and take your Bitcoin out until it eventually one day, hopefully, became an ETF. When that happened, trust shares, or I guess subsequently ETF shares, were redeemed and Bitcoin was pulled out. So in the day or three after the ETF approvals first were sort of processed by the market, everybody looked at those outflows and panicked, and looked at the inflows in the other ETFs and panicked. Oh my God, they said that there were going to be billions and billions and billions of dollars worth of inflows, and it's only a few hundred million going into IBIT and a few others, and larger than that coming out of GBTC. And you look at the panic merchants on crypto Twitter, everybody's like, everybody takes like markets move based on the second derivative of the news, not what's actually happening at the time. So if you see outflows, that is not necessarily in and of itself bearish. You have to ask yourself, are those outflows going to accelerate or decelerate in reverse? That's what moves the market.
I mean, I 100% agree with that statement. It's always the issue that people make is they do the first order deductive. They say, okay, well, outflows bearish, but
it's already priced.
And that's by the way, that's true point in time. Right. Obviously, if you know that they're outflows, the question is, over a period of time, are those outflows larger or smaller than expected? And then what is that? How is that expectation shifting over time? So I'll sort of give you an example of this, right? When Bitcoin's trading 48K, my initial estimation of the outflows were 2 billion. Now the pace of outflows changed on GBTC. They changed from what if they would be on track for 2 billion, actually looking at the pace, you're actually on track for 3.54. So moment in time, you have to realize, okay, my priors are incorrect. Let me shift my opinion. This is actually bearish. But then you constantly have to be taking in new data. So what are you doing? You're surveying and you're saying, well, what do people think the outflows are going to be tomorrow, day after, day after, day after? At some point, what ended up happening in this market was the outflows got priced to 5 billion, 6 billion, 7 billion, when in reality, they were still on track for 3 to 4 because people were putting it into, an exponential curve instead of what should have been a more logarithmic. Okay, now it's priced the other way. 40K BTC, very good level for people to come back in. Outflows are happening. But this is all, look, at the end of the day, this is all hindsight talk.
Yep.
So what's useful today is that the second part of the thesis, which is that post this particular ETF, there's going to be tremendous speculation on every other ETF down the line. That should be coming into play. So at the moment, the ratio ETH BTC is trading at 0.05275. That is a very good level, in my opinion. You start scaling it, because the reality is ETH is the next product, that is the next thing that's going to get productized in ETF form. You might continue to see inflows into the spot BTC product. Maybe the ratio goes to 0.48, 10%, but I think at some point in the next 2 to 4 months, you're going to see this ratio at 6.5.
I agree.
And and so now it's just it's a really interesting time to start coming in, personally.
Well, and what everybody out there should be doing, agree. Like, hindsight is hindsight. We can do our victory lap. We can talk about GBTC all we want, but what matters is the future now, not the past. Go on to Google Farside Investors Bitcoin ETF flow, farside.co.uk. It's just like one of 60 different dashboards out there that show you the inflows and outflows, basically the net flows into every single ETF. Just bookmark it. Look at it every day. You can see, last Friday there were $542 million worth of inflows. The Thursday before that, 405 million. Just keep your finger on the pulse of what's going on in terms of these flows. And to me, this year is going to be the story of flow, right? You have miner selling getting cut in half pretty soon in April. You have this Bitcoin ETF flow that everybody was panicking because it wasn't big enough. Supposedly, everyone was expecting billions on day one. That's not how ETFs work. It's just going to be this steady tailwind throughout the year. And if your ETF dashboard shows that the inflows are slowing down, maybe if you're a little bit levered or you're holding more Bitcoin than you're comfortable with, maybe you should lighten up. But for the most part, like, I expect this to be steady inflows and a reduction of outflows, mainly because of reduced miner selling. Other ETFs, like an ETH ETF, now that's on the table. Does that open the door for non-Bitcoin tokens to be put into ETF form across the board? Is that going to telegraph sort of securities or legislation and intentions of the SEC? Like, all of these things are going to become narratives over the course of the next 9 months. But one thing that, again, I just to close the thought out, flows are the story. There's one thing that's bothering me about crypto right now, and one reason why, I would be longer if it weren't for this particular discomfort. Flows are a great story, but you also need fundamentals to make a market really go into a super cycle. And aside from the already proven use cases, I'm perhaps disenchanted with the lack of new ones. Maybe Farcaster is going to blow up, but I don't know. I'm not feeling the fundamentals as much.
Yeah, I mean, I think the reality of the situation is twofold. One, you have the S&P above 5K. You have NASDAQ ripping. You have what seems to be a very robust economy in the United States. The rest of the world, I'm not waiting with bated breath. I mean, I think China's under a lot of pressure right now. I think Europe's stagnating a bit, but the U.S. is going, and the U.S. is what matters, because that's where all the money is that's flowing into the space. And so, as long as you have strong fundamentals from the equity side and from the tech side, then inflows into BTC keep going. And I think we all know that at some point people get greedy. That's the reality of this market. And there are a lot of people that I think the balance of holders, people that own Bitcoin, it used to be a lot less crypto native, actually. But I think because of the ETF speculation, you've seen a reallocation to Bitcoin. And so people's portfolios are more comprised of BTC now than they have been in the past. And so you still are going to get that wealth effect, and it's going to flow down to different assets. And then the fundamentals just follow, right? So we'll take NFTs, for example. Pudgy Penguin's doing very well. What a ridiculous name. I can't believe I have to say that out loud. But they're now trading at $40,000 because they've managed to actually transform themselves into a TV show, right? They managed to transform themselves into this
TV show for adults.
I actually don't know the detail, but they're actually putting out products, right? My view on this is that as wealth grows, what you're going to see is you are going to see the redistribution, and that's going to cause certain sectors to do extremely well, and then that's going to cause fundamentals to actually improve in those sectors. I mean, Blur, for example, right? If NFT volumes go up because people are respeculating on NFTs, then the value of Blur is going to go up, right? I think that right now, so Tau is another example of this in the AI space. Tau has managed to start raising for basically they've started raising for products building on top of Tau. They're becoming a platform. And that wasn't true 6 months ago. It wasn't true 8 months ago, but it's true today purely because there's more money in the space and people are willing to go out and do this. I mean, going back to Blur for a second, it's the same with Blast, right? They've introduced a new L2. People are willing to deploy capital into building products on these. So
you're saying that the fundamentals will follow the flows, and I have this sort of antiquated commodities mindset that fundamentals lead the flows and create them. Maybe in crypto it's different. You might be right. I hadn't thought about it that way.
I think that's what we're going to see happening. And so what I'm focused on right now is figuring out where exactly the flows are going to go in the beginning. So things
ETH is my no-brainer. Like, how is that so far behind? I couldn't agree with you more on ETH BTC. That is a crazy one.
I think the only issue with ETH is that have you used Say, or have you used any of these other platforms?
No, I've written them off entirely, which is lazy. But I mean,
they're very easy to use, and they're very consumer friendly, and the applications are smooth and the applications are easy. And when you go back to ETH, what you realize is that it's just not a great user experience. Now, I think that doesn't matter as much because the thesis around ETH is more concentrated around institutional flows than anything else. In the same way that, you can't really use stuff on Bitcoin, it doesn't matter.
Yeah, exactly. I think it doesn't. I mean, right? Just to interject quickly, I'm not going to, digress too far. I want you to continue on this point, but let me just say that let's not forget that centralized databases, centralized infrastructure, Amazon Web Services, and all of the things that crypto kind of stands in the face of have a much better user experience than even Say or Aptos, right? So at the end of the day, it's about a decentralized settlement layer that has a network effect and has economies of scale and has sort of a first mover advantage. That's sort of why I'm bullish ETH. I don't think anyone's going to flock to Near or, maybe Solana because they've done something special, but any of these other alt L1s further out the risk spectrum just because of a user experience. What matters is the security and the decentralization. Otherwise, you just go centralized.
I think I'd agree with that. Just talking about price action for a second here. Where do you, if you're trading this market, right? If you're thinking about, okay, let's say you're 50% deployed, you're 40% deployed, you want to get more deployed. Are you buying here? Are you buying 50K? Or is this short-term, long-term in your view extended?
Okay. So let me just preface this by saying that with the way that I form a view in my trading kind of mindset, I start by testing the absolute extremes. And so it's like, what do I want to have on this second? What do I want to have on for 10 years? I don't usually have much conviction in the super short term. So I like to start at the other end of the spectrum. In terms of what do I want to have on for 10 years, I have never had more conviction in my life over any 10-year period in any asset class beyond the conviction that I currently have in Bitcoin.
You can't give people 10-year advice.
No, but hear me out. I'm working my way backwards. So if you're creating if you're trying to not chop yourself up,
okay, all right.
You're trying to not buy high and sell low. Not like sell $38,000 Bitcoin after the ETF comes out because some crypto Twitter bears said it looks bearish, right? And then buy it back at 45K. If you're trying to not chop yourself up, it helps to have a very long-term thesis that you can cling to when you're losing money, right? So with my very long-term thesis, I think that Bitcoin is a no-brainer, that the most of crypto probably is going to zero, but some of crypto will probably take over large swaths of technology and finance. So coming back to your question, in terms of what I would be doing now if I were 50% allocated, I would be allocating myself probably 80 to 90. I would take what the 50% that was sort of allocated for crypto but undeployed, and I would put maybe 70 or 80% of that into Bitcoin, which is sort of the most secure crypto asset that has the lowest volatility. And then what I would do is I would save the remainder of that dry powder to either add Bitcoin on dips or to selectively bet on alts with no leverage that I saw kind of emerging in various ecosystems with some sort of potential, right? Maybe I would be paying close attention. I don't know. Same question back at you. What would you be doing?
Oh, wow. Great question. I'm glad you asked it.
Spicy.
My view on this, just as as somebody that trades a little bit more short term than 10-year. Look, I'm in Monaco right now. I'm feeling a little bit spicy. I'm a gambler at heart. I've seen this price action play out a lot.
You're wearing a black turtleneck like all the French people there.
Is that, what do you mean? Do French people wear black turtlenecks? Is that a thing?
Of course it is. Watch every French movie. They're all wearing black turtlenecks.
What do you mean? Name one French movie.
Leon, that guy that took child Natalie Portman and turned her into a killer.
Okay, name another French movie. That one's easy. Name another French movie.
Amélie. There's definitely a guy with a fixed gear bicycle and a black turtleneck in there.
Okay. I'll go watch Amélie. I'll go see if I can find any turtlenecks. I forgot you married a French woman.
Yeah, dude. I'm up to my turtleneck in Frenchness.
We were talking about something serious before you distracted me with this.
We were talking about let's say that you're under.
So here's the thing. Here's the thing. When you're looking at this type of price action, so this reminds me a lot of the 20K. Any round number breaks, you tend in the 30K break, you tend to get this type of price action where you have to test the liquidity first, right? So at any moment, there are a ton of people for psychological reasons that will sell round numbers. Now there's no actual expected value to selling a round number, where you're selling 40K, 30K, whatever. There's no reason to do it other than people are psychologically wired to go sell round numbers because they like to say, I sold 50K, right? Fine. So when that happens, the first time you hit that number, you tend to get a lot of people that will come in and just sell. Almost always the prudent move is to not buy the first time that number, almost always. Now, when do you know if that's different? You generally tend to know if that's different if you get a large liquidation through that number, it comes back down, and then it stays above that number for more than 24 to 48 hours. So basically the way that I would think about trading this is all my longs, I'm on the sidelines now. I'm waiting because I think there's better EV to wait to see that break, to try to catch it, to buy 51, 52. And then what you're doing is you're actually betting for all-time highs. You're betting for the 70K. That to try to buy here in the 50K when you know that there's a ton of sells. There are a ton of people that have been underwater for an extremely long time, that have been waiting for a while to sell 50K. So
you've taken your crypto off the table, waiting to. I just sorry if I know you haven't done this, but just to clarify for the listeners, you're saying if you're under allocated, you're going to wait to buy a break. You're not going to buy right now because it might go down.
I'm taking the midwit take, which is that I'm buying, and sometimes, oftentimes a midwit take when it comes to round numbers is right, because that's what makes round numbers important.
Why wouldn't you just buy here expecting a break in the future? I don't understand. Maybe I'm stupid, but
because generally what you tend to do is you get those like 10-15% sell-offs once it doesn't break a round number.
But you're not saying to buy the dip, you're saying to buy the break.
No, you can buy the dip or buy the break. So
okay.
the first, this is the first part of the statement, is you buy the break. The second part is I don't think the inflows are stopping anytime soon. And so I think any amount of selling by the people that already own this asset, whether they're miners in China, whether they're people in the US that have been holding for a long time, there's no other. There's not going to be enough supply to take this thing lower to overwhelm the inflows, because you have to remember we're just getting started.
Yeah, I mean, that's why I'm not trying to buy a dip. Like the price of IBIT, the ETF that most normies are buying, is $28.46 a share. There's no round number there. And those inflows are unstoppable. Like, to me, the idea of trying to get cute with it and dance between the raindrops, like you're probably right. And it is probably a great way to extract extra alpha out of this market, but I'm not good enough to do that. So I don't even try.
Look, we're traders at the end of the day. You can talk long-term, I'll talk short-term, but when I see situations like this, what I see opportunity, and my job is to exploit that opportunity.
Yeah.
Now that being said, I think Q1 is an interesting one, because the only people that are buying now are the people that actually decided. A lot of the bigger players that are willing to get into this market, they either decided in Q4 of last year, or they expedited some processes to buy. I think the most amount of people that are going to come into this market are going to come in Q2, because the ETF got approved in Q1, and that's galvanized a lot of people to take this more seriously. And so starting in Q2, you're finally going to get those people to get their boards to sign off on it.
Right.
And you're going to get a lot. Right. And the halving happens. So I've been talking to a lot of exchanges. I think that the best way to evaluate this market is to see who new is coming into this market. And as far as I can tell, there are tremendous amount of new people that are coming in, both from the retail side and from the institutional side.
I'm seeing the same.
A lot of the investment banks. I mean, a lot of the hedge funds that stepped away post FTX, they're not coming back in full force, because they've realized that this isn't going away. Now that's going to make life a little bit harder to trade, especially the large caps, which I think you're seeing this in the market, whether it's conscious or not. A lot of the natives have moved away from levered trading large caps, anything in the top 30 people. Just the amount and the preponderance of people that are trading on leverage in those large caps, as far as I see on Twitter, are moving away. They're moving towards on-chain metrics, shitcoins, all this other stuff, because I think that area has and will continue to get more competitive over time as these new people come in. But it's going to provide a boost in liquidity. It's going to provide a boost in inflows. It's going to provide a boost in value to a lot of these the top 10, top 20. So one thing I'm looking for is that there are a lot of mid caps and large caps that have actually underperformed. I mean, if you look at Solana relative to BTC, you look at Matic in a huge way versus BTC. Maybe around Q2, I have this half-formed thesis that the new allocators that are coming in are going to pump some of these assets.
And even if they don't, like, the rising tide that you describe will lift all ships. And that's no excuse for bad investing. But what it does do is it allows you to be wrong for a little bit longer when you're trying to time some really difficult kind of like speculative theses on alts. Um, interestingly enough, it's funny you mentioned that you're talking to new people getting into the space. I am too, actually. Like, I spend most of my days now sort of dancing between the raindrops, actively trading and systematically trading things like, gasoline, naphtha, other random parts of crude oil that most people don't like, the altcoins of crude oil. But in my world of commodities traders, pretty much everybody's now asked me, they're all coming in and saying like, hey, is this a good time to buy crypto?
So
And
in your commodities world, people are
yeah,
coming back,
I mean, coming for the first,
or
coming to me
coming
to
for the
talk
first
about
time.
crypto for the first time
For the
ever.
first time. So this didn't even
Yeah.
happen in 21.
No, it didn't. It didn't. I mean, in 21, I was like absolutely laughed out of the room for pursuing a career in crypto. And now
What do you think? What do you think changed in these people's minds? I mean, these are obviously very commodity focused, oil focused traders.
I think it just, I mean, it's not like I'm some visionary. Like I kind of, the light bulb sort of went off for me toward the highs. But, similarly, this is now the fourth or fifth time that Bitcoin is having this just like rip roaring rally. And you just can't fucking write it off anymore. It survived low interest rates. It survived the period of apathy. It survived the SEC onslaught. It survived all these things. And I think the light bulb that's going off for the commodities community is the same light bulb that went off for me. Like, this is a digital commodity. It is something that governments, citizens, non-state actors, and all sorts of other types of entities will need and want to hold on balance sheet in order to facilitate very important functions of wealth preservation, value transfer, and occasionally like a medium of exchange for hard goods. Like it's becoming obvious to the world. Also, ETH as a settlement layer, I think, is a topic that a lot of people in commodities are focused on, because settlement layers in commodities are notoriously tricky and problematic. So they're asking like, hey, is now a good time? It's funny that you sort of asked the same question, maybe rhetorically. I was saying like, if you're 0% allocated to crypto, which still a lot of people are, now's as good a time as ever. The 10-year thesis is so bullish that you should allocate something. And if you're 50% allocated or more looking to add, I even if I were still actively trading Bitcoin, I don't know if I would wait, because I just don't like looking at these ETF flows. Like, how you're literally just hoping they stop in order to, if you want to buy a dip,
I just want to go back to the commodities point for a second. So you're inside, right? You're trading oil all day, every day. What do you see? Is I know a year ago you talked to me a little bit about the overlap between
Yeah.
the two industries, right? Not just that Bitcoin is a digital commodity, but also that there might be some overlap, that you've seen some exploration and actually settling deals.
Yes.
Using Tether or using Bitcoin, right? Whatever it is. Has that progressed in any meaningful way?
Like functionally, no.
Mm-hmm.
Other than you could say that, the redenomination of hydrocarbon trade, certain trade lanes, like China and Russia trade crude oil denominated in renminbi now. Some of it. India trades some crude. India buys some crude oil denominated in non-US dollar terms. Like, aside from that little baby step towards a world where there's a new global reserve currency that everyone, even if they hate each other, can kind of get their heads around, like Bitcoin. Like, that little baby step has taken place. But I think what's like where crypto and commodities will eventually merge, there are a few different strands of that rope, and I could describe them to you now if you're interested. But I think the baby step that needs to be taken, other than redenominating global trade away from the dollar, which is already taking place, is just commodities traders getting their heads around a digital asset, which is like it belatedly starting to happen in a big way. And then what will follow is crypto will replace commodities back office, which is a way bigger mess than TradFi back office. Commodities back office
Yep.
is like settling an oil transaction between Nigeria and China. Like, you wouldn't even believe how many nodes and pieces of paper and faxes and whatever. Like, that needs a decentralized database. Then it needs a decentralized denominator, or some of it does, not all of it. The dollar is great, but like it's not perfect for everybody.
Well,
And then
it's definitely not now. I mean, you're
yeah,
seeing it. You saw it 2 years ago when we first froze the asset reserves of Russia, when that 800
yeah.
billion got locked up. Well, now it's getting worse. I don't know if you've seen the recent headlines, but they're actually thinking of there's agitation because of the aid slowdown to Ukraine to actually take those reserves and give them to Ukraine, and that would
Yeah.
be a death blow. It wouldn't be instantaneous. Obviously, it would never be instantaneous. But in my opinion, that would be the crossing of the Danube. That would be the point of no return.
I thought the crossing of the Danube that was the point of no return, or maybe the Rubicon
Yeah,
was
yeah.
when the Danube's a nice river too. I like it. But
You
I
know what?
think
It's just I was just in Serbia. It's
yeah,
just it was
that's why
stuck in my head.
you're a bohemian guy. So basically,
Yeah, what can I say?
the I thought the crossing of the Rubicon was when they took the assets in the first place. But yeah, if they just fucking fork them over to Ukraine to buy weapons, oh my god, yeah, it's crazy. I mean, the final thing that I think crypto could be useful for in the world of commodities, and we're getting there fast, is like most commodities that are relevant to most of the world are not just opaque, they're impossible to trade. Like the types of oil and corn and wheat and things that like you can sort of see on screen if you're an institution,
Mhm.
they constitute like a couple basis points worth of global consumption. Like if you imagine there's a market for West Coast, jet fuel or Indonesian rice, right? But the exchanges don't have time to spin these up for institutional counterparties. Meanwhile, like one thing FTX actually did a good job of was just like tokenizing new markets and throwing them out there. Sure, half of it was probably illegal, but like at some point in the future, I think the nature of tokenized assets will make it such that most commodities trading will be tokenized and take place either on or off chain, but in tokenized form. And I think that's like a real innovation for value transfer and basically and hedging, speculation, all the things that make commodities markets tick.
Yeah, somebody needs to start to take that step. I mean, it's been, I think that's been prognosticated for a long time across all markets, and it is slowly happening in the traditional markets. I mean, you're seeing tokenized money market funds pop up left and right. Franklin Templeton was leading. I mean, I don't know. They picked Stellar for God knows what reason, but they did attempt to tokenize their money market fund, and so this is coming at a certain point. And then once it's tokenized, I think a lot of people make the argument, well, that's not really good for crypto. No, it's amazing. It's amazing because it's now interoperable with all the networks, right? So whether that specific asset or that specific product actually delivers any bottom line to any network, it doesn't really matter because it's now part and parcel of being able to interact with that world. And so now when you're able to interact with a whole new world, that's going to bring value to that world. It's going to drag it away from your traditional architecture. So I can see that happening with commodities in the long run.
Dude, even dog with
as
hat is good for crypto. Like any use is good for crypto, even if it's
you said it wrong. It's whiff. It's whiff.
Sorry. Even dog whiff hat is good for crypto. Even the casino stuff is good. It's just use cases are good, even if they're not necessarily the most like let's call them blue label use cases. You know what I think is interesting? Like something that's cooking in crypto, aside from just a broader resurgence of interest and the ETFs bringing inflows and all that good stuff, is the regulators have gone kind of quiet, haven't they? Like this is an election year, and I was expecting them to start banging the friggin' drum, but I think they're just like kind of hoping that people will forget the war they just lost with taxpayer money against crypto. I don't know.
Well, I
What do
mean,
you
it's
think?
it's a political issue at the end of the day. It's such a bad look for them. They spent so many resources and so much time coming after this space, and they have absolutely nothing to show for it. In fact, they only have taken massive L's. One of the best trades that we've done was we bought Ripple equity because Ripple equity was trading at a 99.5% discount to the actual balance sheet of the company. Now, why was it trading at such a massive discount? Because they were in an embroiled battle with the regulators, and it was entirely possible that these guys actually ended up losing their battle. But after we saw the SEC lose and lose and lose and lose and lose and lose and lose, it starts to make you pretty bullish. And so actually before that arrangement, or the decision the SEC came to with XRP, that they absolved them of a lot of the different issues. Obviously, there's an appeal and whatnot. We started buying a lot because you could buy the equity for $1 to $1.5 billion, and they had about $25 to $30 billion worth of a variety of different things on their balance sheet, mostly in Ripple token, but also cash, also their venture investments, a lot of different things. I'm telling you this anecdote now because there are a lot of other opportunities like that exist today, because the regulators are taking their foot off the pedal, in my opinion.
That's really
and
great.
So if you look at what historically in this industry has been priced poorly because regulators have been so aggressive with these types of assets and these types of products, now you know that the regulators are not going to be as aggressive, especially in an election year. It's not going to happen. So what do? You start to identify those pockets of opportunity and you start to bid them up. And let me tell you, if Trump gets elected, you're going to make a lot of money. Even if Biden gets elected again, or Kamala,
status
or whatever,
quo, and
they have lost the political will to come after this industry in a big way.
Like, what's your worst case scenario politically for crypto? Is it like Biden steps out because he's too old or infirm or something, and like Elizabeth
No,
Warren
are you kidding?
is
Oh well, yeah, okay. I was gonna
like, I'm trying to construct a
clown
worst
on you
case
for a second. If Biden stepped down, it would probably be a good thing for crypto. I mean, obviously, yeah. If Elizabeth Warren comes up, then that's it. It's just Elizabeth Warren.
and it's
She's
just
the only one.
I'd underwrite
nobody
that
else cares about this industry. Like, nobody else cares.
And Biden probably cared, or Biden's lackeys probably cared more than anybody about trying to kill crypto, and they just got ironed out. They're done. Like, they can't anymore. So
they got completely nuked.
Basically, they hollowed out the American trading industry. They definitely made it harder for some American firms to trade crypto. They spent a ton of money, like, slowing down progression in the space, and probably sent a lot of talent offshore, probably bankrupted a lot of startups who ran out of runway. A lot of projects didn't get traction because they prolonged the winter. But it's over now. Like, it's over.
Everybody ended up moving to London because of this. So many people London, Dubai.
Yeah.
And it would be an amazing thing if, look, politics aside, if a reasonable person got elected on this issue, or let's say, somebody on the right got elected, I think it would be a wonderful thing to see all those people come back, because I think they would.
Yeah.
And it would be, the American invention historically has been the ability to pursue success. That's always been the case. We've done such a poor job with it in this particular industry. It would be an amazing thing to get it back. And I think we can, and I think we have the opportunity to. I think that I think I will say, Jonah, I am so proud of the American court system. I am so proud of the American court system, that when you have government overreach, you had the checks and balances. They worked. They genuinely worked. You had bad arguments by bad people, and those arguments got refuted, and the industry won. And that is what we need. We need more of this. And, again, I think I've outlined a little bit of how to make money on it. I mean, one thing that I'd love to hear from anybody that's listening is, what do you think the most targeted sectors have been? I mean, my mind is around things like DYDX, SNX, a lot of DeFi products, but I think that there are a lot of opportunities out there to start picking up things that the regulators tried to stomp on, and they haven't necessarily been repriced yet.
So I think that's really good advice. And one thing I'd like to add on to it for the listeners, just anecdotally, what I'm doing in my career right now is I'm drilling in really deep into a sector that I know really well, which is petroleum and refined products, and building trading strategies and sort of day trading my way around that market, and then taking the gains and sort of investing them into Bitcoin on a more passive basis. Avi, you're trading crypto a little bit, or maybe a lot more actively than I am. But I think the broader lesson for the listeners from what the two of us are doing is, like, pick your niche, dive into it, learn it really well, get in the Telegram channels, read the publications that matter, get on Twitter and follow the accounts that tweet important shit and philosophy about your narrow niche. Trade that niche, but don't spread yourself too thin trying to like day trade 100 things or 50 things. So day trade your niche, get good at it, and then take your profits and sort of diffuse them back into your broader, like more passive longs that you have like a 10-year thesis on that you don't need to trade actively. And I think that could be something that turns into a real lucrative process for people, hopefully.
Well, I think that's great advice, Jonah, as always. Look, you know, at the end of the day, it's always a good time talking to you. I think
Likewise.
this was a fun one. You know, I apologize because I've been in Monaco trying to learn roulette for the last week.
Trying to learn roulette?
Yes,
roulette. You say black or red.
No. Listen.
I guess in French it's noir and rouge. But
no. Listen. You know, there's many things to learn. Apparently, I don't know. I'm being told that there are many things to learn. I'm probably gonna stick to blackjack and poker though. But
well, I stayed up all night watching the 49ers lose. That was what I did with my life. So yeah, I'd rather be in Monaco gambling with you.
You really think that they were gonna let you really think they were gonna let the 49ers win? You realize it was scripted, right? They had to do it for, you know, I mean, my favorite, by the way, just my last point that has nothing to do with crypto, nothing to do with anything else. Completely out of left field. But my favorite argument that I now see is that it was scripted specifically because they're trying to encourage neonatalism.
Who's they?
Which is
the lizard people?
Exactly. The lizard, like the you know, the power, Jonah, the powers to be are trying
the Illuminati,
to encourage neonatalism. Right. And they're trying to showcase, you know, a powerful couple together and that encourage people to, you know, get together and have babies. It's like the most, like, people writing like pages about this. Like,
see, I had a different thesis.
How do you have the time?
I had a different thesis. I thought that, like, basically my working hypothesis is that Joe Biden died in 2021 and that the deep state reanimated his corpse with alien technology from Area 51. And I figured that whoever reanimated him would probably want to promote the city that, like, will reelect him with a 90% margin. It's called San Francisco. I grew up there. They fucking love him, or love whatever he's become.
How did you grow up in San Francisco and end up a well-adjusted human?
Back then it was a really interesting, well-adjusted place. There are artists, musicians, counterculture, like good writing, like all kinds of. It was like a really multifaceted place with the whole spectrum of professions. And you know, my parents on government salaries could afford a house and a nice life there in the American dream. Now it's turned into something pretty ridiculous and sinister. I wouldn't go back. It's not my kind of place. But it used to be friggin' awesome. It used to be absolutely incredible. Yeah. It's, I mean, like, physically, it's take you know, the problems that it has, like with urban blight now aside. Like, just in terms of like layout, I think it's the most beautiful city in America, with the hills and the skyline kind of rolling around Coit Tower and the Golden Gate Bridge. It's awesome.
When BTC hits 100K, I'm expecting you to try to take over SF and turn it, you know, make SF great again.
Well, that's the problem. When BTC hits 100K, that'll get me into like lower middle class in San Francisco, right? Like, you need to be a motherfucking plutocrat to own a single family home there. It's crazy.
Yeah, that's nuts, man. Well, maybe one of our listeners will get there eventually. They'll invest it. You know, maybe somebody put some money in Tab at $1. It's now $5.86. Help Jonah take San Francisco back. One last thing: if you know any good French movies, let me know, because Jonah didn't know a single one, despite being married to a French woman.
Robbie Jacob, watch that one.
Okay, thank you. All right, guys, we'll see you soon.
Great talking to you, Avi. Not investment advice. Love you all. Do your research. And
don't. If you lose your money, it's not my fault. It's John's fault.
No, please. Good talking to you, Avi. See you next time.